Hey everyone, what's going on? It's Jason here. Today we're going over some AMC and the anatomy of the short attacks. If you guys haven't, make sure you guys smack the like button below. Not only does it help out the video, but it also helps out more people learn about AMC and what's going on here. If you're not a sub, hit the sub button below because remember at 10K subs, we got a giveaway of some AMC stocks over on the public app. If you guys are wondering what I'm using here, I'm using Weeble. There's a link down in the description. Sign up, get 2 free stocks worth of $1,800 when you deposit $100. You also get the tier 2 NASDAQ view for 3 months. As you can see here, the last 2 weeks has been a crazy ride. We've been up, down, back up again, and then back down again. Our high again over on 316 was at $14.87, which seems like a far cry now at $9.36 on this last Thursday. We ended after market hours at $9.27. But again, after market hours are neither here nor there. Now, I'm hoping coming up on Monday, we see a good climb like right here. We had this right here with this big climb out from 875 on the morning of 325. I would love to see something like this again come up next week. We're going to bring up a couple of our memes of the day as well real quick, man. Spread some happiness and joy. This right here, obviously, is a play on the Godzilla movie right now in theaters, which is actually doing very good in the box office numbers as well. Upwards of 50+ million on the 5-day week, which is really great, and hopefully that will boost some confidence in AMC. This right here has the subreddit, all of us, the subreddit groups, everybody right now, right? As us, man, in good old Wall Street, aka the suits, saying, this isn't fair. Well, guess what? Hey, we're here to play too now. I really do think retail investors are here to stay. This right here is a play on the disinformation this week. It has Melvin Capital and Citadel shoving in money, aka disinformation, paying lots of money for disinformation, like you've seen this week with the a bunch of news stations coming out and saying they're going to put 500 million shares. This is proved. This is everything's going down right now. Then they had to go back and change their titles to say maybe if it gets voted in. Obviously, we all voted no. I'm sure some people out there voted yes as well. Not hating on anybody in the way you voted. Again, I think you guys should vote the way you like to vote. This right here over on the Reddit AMC stock is actually a really good post. It's called Counterfeiting Stocks 2.0, the anatomy of the short attack. Now, you guys obviously know the short ladder attack is a devious method that has 90% success rate that would lead to a company's bankruptcy and its stock price into USD worth of a penny stocks. The most common tactics are flooding and media assault, but it goes beyond the measures of that once counterfeit shares are involved. Now, this kind of happened a little while back to a little-known company called Toys R Us. They got shorted to death. It kind of killed that company out and made the company bankrupt. And it happens, and it's sad to see that happen. It's the reason why a lot of people don't like shorters and don't like hedge funds shorting companies all the way into the ground. I think we can all agree that we probably, all of us, don't like that very much, or we wouldn't be on these meme stocks, you know, trying to fight against the hedge funds. The short attacks ace up your sleeve. Abusive shorting are not random acts of renegade hedge funds, but rather a coordinated business plan that is carried out by a collusive consortium of hedge funds and prime brokers with help from the friends at the DTC and major clearinghouses. Potential targeted companies are identified, analyzed, and prioritized. The attack is planned to its most minute details. The plan consists of taking a large short position, then crushing the stock price, and, if possible, putting the company into bankruptcy. Bankrupting the company is a short home run because they never have to buy real shares to cover, and they don't have to pay taxes on the ill-gotten gains. A lot of people don't really realize that if a company goes bankrupt and the stock price goes to zero, these companies don't have to pay taxes on these gains, right? You don't have to pay taxes on those gains anymore. That's the crazy thing about it. When it's time to drive the stock price down, a blitz is unreleased against the company by a cabal of short hedge funds and prime brokers. The playbook is very similar from the attack to attack, and the participating prime brokers and lead shorts are fairly consistent as well. This right here kind of breaks this down right here. Obviously, you got the demand curve going down right here. The demand curve right here, unmanipulated selling price, which is going up, obviously, if this is a true supply. Then you got the true supply plus disclosed short shares. Then you got the true supply plus all short shares, right? Then you got your real shares, your disclosed shares, your naked shares. and you're manipulating selling price. So you're pulling this price down over time, right? And to them, obviously, as fast as possible. And this right here is the demand curve is infinitely elastic. It moves constantly. So this right here shows the demand, the pull on the stock, shows also all the shorts, your disclosed shorts, and your true supply curve if this stock wasn't getting manipulated. So again, typical tactics include tactic number one, which is flooding. Ultimately, the price of a stock is found at the balance point where supply and demand for the shares find equilibrium. This equation happens every day for every stock traded. On days when more people want to buy than want to sell, the price goes up. And conversely, when shares offered for the sell exceed the demand, the price goes down. The shorts manipulate the laws of the supply and demand by flooding the offer side with counterfeit shares. They will do what has been called a short ladder attack. And you've seen that again. We've seen that with AMC right now a lot when you see these ladders going down and down and down and down and down. They use computer systems to trade these stocks back and forth. And again, they do shoot the numbers of sales up, which makes the system think the stock's going down. You'll see this laddering effect in the price. It works as follows. A short will sell a counterfeit share at $10. Short B will purchase the counterfeit share, covering a previously open position. Short B will then offer a short counterfeit share at $9. Short A will then hit the offer, or short B will continue down and hit short A's $9 bid. Short A buys the share for $9, covering his open $10 short and booking a $1 profit. By repeating this process, the shorts can put the stock price in a downward spiral. If there happens to be a significant long buying, then the shorts draw from the reserve of strategic fails to deliver, and then flood the market with an avalanche of counterfeit shares that overwhelm the buy side demand. Attack days routinely see 80% or more of the shares offered for sale as counterfeit shares. Company news days are frequently attack days since the news will mask the extraordinarily high volume. It doesn't matter whether it is good news or bad news, flooding the market with shares requires foot soldiers to swamp the market with counterfeit shares. An offshore hedge fund devised a remarkably effective incentive program to motivate the traders at certain broker dealers. Each trader was given a debit card to bank account that only he could access. The trader's performance was tallied, and based upon the number of shares moved and the number of success perimeters, the hedge fund would wire money into the bank account daily. At the end of the day, the traders went into the ATM and drew out their bribe, instant gratification. So tactic number two obviously is the immediate assault. The shorts, in order to realize their profit, must ultimately put in the victim into bankruptcy or obtain shares at a price much cheaper what they shorted at. These shares come from the investing public who panic and sells into manipulation. Panic is induced from assistance from the financial media. The shorts have friendly reporters with the Dow Jones News Agency, the Wall Street Journal, yada, yada, yada. You guys what I'm saying here, lots of news stations. I'm not trying to say or name them all, but we kind of seen this the other day when they put in those articles saying, hey, look, we're putting 500 million shares. They're putting 500 million shares. They didn't put maybe there's a vote on it to see. They didn't put like as soon as this could happen was mid-May. They just put it out there, which made some people panic and sell. The common thread, a number of friendly reporters who worked in the street.com and Alumni Association supported the short attack by producing slanted stories as it was being crashed. One of the more outrageous stories was a front page from the U.S. Today during a short crash of Taser stock price in June 2005. Now, we don't have to get all into this again. I won't go all into this. This happened the other day. I don't have to go over that story. Some of you guys can look the story up. It's a pretty crazy story, though. But this story right here, we just have happened the other day is when they were talking about a dilution of shares of 500 million shares into AMC. And they just put, hey, they're going to dilute 500 million shares. A lot of people thought they were doing it right now. So you're seeing people running and selling those shares, right? This happens all the time. This happens on YouTube. This happens on news media in general. There's people always getting paid somewhere by somebody bigger than them to share these kind of crazy stories that are kind of factually false a lot of times, if not kind of like a half-truth, whole lie scenario, kind of like we just had the other day with the dilution shares. So tactic number 3 is bribe analyst reports. Some allege independent analysts were actually paid by the shorts to write slanted negative rating reports. The reports, which were representative as being independent were ghostwritten by the shorts and disseminated to concede with the short attack. There is congressional testimony in the matter of the Great Analytic and Rocker partners that expands upon this. These libellous reports would then become a story in aforementioned friendly media. All were designed to create panic small investors into selling their stocks into manipulation. So tactic number 4 is plant a mole. Planting moles in the targeted companies. The shorts plant moles inside these target companies. The moles can be as high as a director or as low as janitors. They seal confidential information, which is fed to the shorts, who may feed in friendly media. The information may not be true, may be out of context, or maybe stolen documents may already be altered. Things that are supposed to be confidential, like the SEC preliminary inquiries, end up as front page news with the shorts friendly media. And then you have the frivolous SEC investigations, which are, false investigations that lead into investigations from the SEC. We've seen that again with plenty of lawsuits lately. You got the class actions lawsuits, which happen a lot. You've seen it happen with the company Ride, which is Lordstown. They come in and say these crazy, outlandish things about the company, which leads into lawsuits because the stock price is falling down. And then you also have paid bashers as well. These are the people you see on the comments section in YouTube. These are people that you see making posts on the Reddit posts. They're very negative and very crazy, and they can go either way, right? As well. These posts can go either way, for or against. But a lot of times these are against, obviously, right? They're making crazy, outlandish claims that are very checkable and very easy to go and D&D that as well. You can see that they're false. Like right now, you see a lot of people in the comment section on YouTube that are bots. You can tell they're bots because they go through and then you see people like commenting which one's better, AMC or GME, AMC or GME, and they're fussing back and forth and saying one was planning for the next one. It's crazy amounts of talk between all the stocks, and you see that a lot, especially here on Reddit. Again, at any point in time, more than 100 emerging companies are under attack, as described above by these short attacks. So here's the cover up: the securities industry, certain respected members of the corporate America who will like the profits from the illegal shorting, certain criminal elements in our federal government, do not want the public to become aware of this problem. The reason for the cover-up is money. And obviously, money creates evil. How it goes. Everyone, including our elected officials, get lots of money. Consequently, there is an active campaign to keep a lid on this information. The denial of these illegal practices comes from the industry, the DTC, the SEC, and certain members of Congress. They are always delivered in blanket generalities. If indeed there is no problem as a claim, then why don't they show us the evidence instead of actively and aggressively fighting and deflecting every attempt to attain information that is easily accessible from them and impossible for the companies and investors? The accusers are counterattacked as being sour grapes, losers, lunatics, and opportunist lawyers trying to unjustly enrich themselves. Death threats are not an unheard of consequence. Now, I mean, again, anything when it comes to big money like that, you're liable to have anything happen. The securities industry counters with the campaign of misinformation. For example, they proudly pointed out that only 1% of the dollar volume of listed securities are failed to delivers. What they don't mention is failed delivers are concentrated in companies being attacked. For every disclosure failed to deliver, there are maybe 10 times to 40x that number of undisclosed counterfeit shares from companies being under attack. The stock's price depressed to a small fraction of the price of an average share. Therefore, the fails to deliver as a percentage of the number of shares is considerably higher than as a percentage of the dollar volume. Much of the abuse occurs in over-the-counter markets, which is OTC, regional exchanges, and on unregulated foreign exchanges that allow naked shorting of American companies who are not even aware that they're traded on a foreign exchange. And as you can see, this right here is what we were kind of going over yesterday as well with the new DTCC rules that we hope obviously change a lot of these things. But again, they're just rules, right? We haven't seen these rules go into action yet. We need action. We need more penalties, bigger penalties than what we have right now. These companies shouldn't be paying pennies when they get penalized on every $4 or $5 they make, right? You know, if we're penalizing them 5 cents for every $5, then who cares, right? They don't give a care about that. This is one reason why we went over this yesterday with the new DTCC rules. And I'm hoping we see some better action from our government. Hopefully laws get changed from these things going on. But again, you know, that hope is very small, but it's always going to be there. And I'll keep practicing and keep preaching these rules because I hope that we have a bigger and better tomorrow for companies going forward, and we don't see these short attacks happening and killing out companies and bankrupting them to the ground. If this is something you guys like, make sure you guys smack the like button below. If you haven't, make sure you guys hit the sub button. And remember, if you guys want to be part of the Discord, there's a Discord link down below. They'll have you guys be a part of the Discord. And if you're not a part of the Patreon, there's a link down below for the Patreon. Stay up to place before anybody else be in the secret streams. I will see you guys on the next video. Peace, fam.